Hi, everybody. Thanks for joining. Before we dive in, please take a minute to subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. These aren't the largest REITs that I own, but these are 8 real estate investment trusts, or actually 7 of them are real estate investment trusts. Walker and Dunlop technically is not, that I own in my portfolio and that I'm very confident in over the long run. So just a quick little bit about each one. EPR Properties is the first one. They are the experiential REIT. They own movie theaters, water parks, ski resorts, golf attractions. Topgolf's one of their largest tenants. Over 200 properties in total. The big risk is the movie theater exposure. That's why the stock has taken a beating lately and why a lot of investors are scared about it. But I think those fears are very overblown. EPR's theater properties are very high end. They're the kind that would probably release to other operators, even if one of their tenants went bankrupt. So I'm not too concerned about that. Very nice dividend yield. They pay in monthly installments. It's one I've been adding a lot to lately. I think it's one of the biggest bargains in the real estate sector right now. 2, Iron Mountain, IRM. Iron Mountain is probably best known publicly for those document shredding trucks you see around large cities. They have a mobile document shredding service, but the core business is that they own record storage facilities. There's a lot of records that still need to be kept in paper form for a long time. Think medical records, legal records, things like that. So they own the facilities that store those. They also own a portfolio of data centers. They have a big services business. Pretty big REIT, a little over $15 billion in size, 4.8% dividend yield, and one that I think has a very bright future ahead of it, especially as it pivots into data centers. Next is Tanger Factory Outlet Centers. I love outlet shopping as a play on retail long term. It's a more economical way for retailers to maintain their physical presence. You hear about a lot of retailers closing underperforming locations in malls and things like that. Outlets can be a nice alternative if they still want to maintain a physical presence. Occupancy has been rising nicely in the past couple of years. Little over under $2 billion market cap, the only pure play REIT on outlet shopping, and pays almost 5% as a dividend. Next is Health Peak Properties. Ticker symbol there, it's not on the screen, is PEAK. They own life science, medical offices, senior housing properties. They have about a $14 billion market cap, very recession resistant type of real estate. There's always a need for healthcare properties no matter what. 4.4% dividend yield, and one that I've owned for a long time and plan to keep owning. Walker & Dunlop, the only non-REIT on this list. They are a real estate finance company. They originate commercial loans. They service commercial loans. They have a commercial property sales division. They have a commercial real estate investment bank. They essentially aim to become the leader in commercial real estate finance, and they're well on their way. A little over $3 billion market cap, 2.6% dividend yield. Their leadership is fantastic. It's one that I think will be worth a whole lot more in the coming years. Next is Public Storage, PSA, another stock that's been in my portfolio just for a long, long time. They are the dominant leader in the self-storage industry. There are a lot of good players. Public Storage just has a bigger market share than its next 3 competitors combined. You've probably seen some of those big orange storage buildings in your local market. Those are Public Storage. A little over $50 billion market cap makes it one of the largest real estate stocks in the world, and almost a 3% dividend yield. Self-storage has been a very well-performing type of real estate over the years. If you want to see a really impressive chart, look at Public Storage's total returns from its IPO until now. Next is Outfront Media. Outfront Media, you probably don't really associate this with real estate, but Outfront Media operates billboards and other forms of outdoor advertising. Next time you drive by a billboard, there's probably a little company name on the bottom, whoever owns it. Outfront is one of the big players in that. They also own the transit system advertising in places like the New York City subway, the DC Metro, things like that. So about a $3 billion company. They got hit hard by COVID because obviously no one was in the transit systems where they advertise, and no one was driving around looking at all the ads that they put up. So tough time during COVID for them, but they're rebounding nicely. A little over 6% dividend yield. There's a lot of execution risk here going forward in growing and kind of keeping up with the digital transformation of advertising and things like that. But really nice value play that I think will do well in the years to come. And Simon Property Group, SPG. Simon is the largest mall owner and operator in the world. And it's not even close. They have a $40 billion market cap. They operate a lot of high-end malls, especially under the Mills brand name. And they are the dominant leader in outlet real estate, which I already talked about in this video. The Simon Premium Outlets brand has the leading market share in the outlet space by far. Almost a 6% yield because of a lot of pessimism about retail. The stock has been beaten down, but it's a very well-run company, a lot of cash, a lot of profits. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.